Hi traders, and welcome to this week's edition of the Keyzone Traders Trade of the Week. This week we're going to look at a day trading strategy on the FTSE. It's still going to have a lot of characteristics and principles that we review in most of our Trade of the Weeks, but this week we're going to talk about the importance of risk management. Even when we're in a setup which is pretty textbook and it's doing exactly as we expected it to do, it's still important to be aware of other factors that may influence the trade, other things that are going on in the market, and it's still really important to manage our risk on those trades. So with that being said, let's go take a look at the charts. Okay traders, so I'm going to start by looking at the report that I put out this morning on my Twitter channel before the market opened with my zones and analysis as well, because that will tie in and show why I took the trade that I did. So we said that 72 to 84 was quite a key area in the market. So if we broke above, then it opened up and moved higher, but if we held below, then broke the zone below at 72.25 to 37, then we could see further downside. So 72 to 84 was a key area in the market, especially as we were coming up to that area and trading around that area pre-market. So now let's go and have a look and see what happened and the trade that we took. Okay, so we're on the replay function, and just to show why I felt 72 to 84 was such a key area in the market. You can see here that we had held it as that area as support here, and then when we broke through impulsively here, we then held it as resistance here, and we'd also started holding it as resistance here and also here. So it had several touches as support and resistance, which meant that there was some decent institutional flow in and around that area. So it was a bit of a breakout area. If we broke above, that was what I was expecting to see, but I knew that some higher pricing, but I knew that there was institutional order flow there as well, because it had reacted so many times from that zone that it was also potential for resistance. So with that, now let's go and have a look at the lower time frames, and also just to show here, 72.25 to 37. You can see it created this bit of a base of this structure here, of this range. We'd created a range and a bit of a base of this structure there. So I felt that if we moved below that zone, we would then push lower as well. So that was my thinking. That was what my read on the market was. So now let's go and have a look at the charts and see what we traded. Okay, so we're on to the 3-minute chart here, and I've got two lines. I've got the previous day's high from the previous day's cash session at 72.73 spot 3, and I've got the overnight highs at 72.75 spot 3, which were it's the highest price traded in the overnight session in the overnight future session from 1 AM UK time. So those are sort of two areas in the market and two levels in the market that people may have their stops behind. And when they have their stops behind them, that's what creates that liquidity grab. It what entices the market to move into those areas, because there is clearly liquidity there, and it wants to take that liquidity out. So now let's go and have a look and see what the market did. So we got this really big, strong, impulsive candle up, which again will entice buyers into the market. They will sit there and see that really strong push up, and people, it's that FOMO, the fear of missing out, of people trying to get into a long trade thinking the market's just going to push higher. However, what then happens is we have the market just takes out both those levels. However, notice on this candle that we've got a quite a long tail to the downside, and the price doesn't close back beyond those levels. It's still looking like it could potentially break out. So we still haven't seen our reversal signal. We still haven't seen the sellers step in. The next candle, we take those highs out even further, make sure we grab that liquidity, and then closes back down on and below those levels. So our entry would be below those levels at a resistance zone, having taken out the liquidity. So that therefore is a signal for us to get short. So we entered the trade on a break of this candle, and we had our stop. Let me just take these two lines out now so that you can see our entry points and exit points. We had our stop above here, and so we had an entry. Let me just have a look. Our entry was at 72.71. We had a stop at 72.80, and we had a target at 72.62. Now, we was aware that we had the closing gap at the previous day's close at 72.60. So it was quite a nice area for us to target as well. Now, we only went for 1-to-1 on this trade because although often, especially with this pattern, you can see the market move all the way down to the previous to the lower zone, it was expiry today on the FTSE, and often with the expiry you can see some moves before the expiry period, which is at 10 past 10, and then on the expiry period you can see some fluctuations in the market. So it was important just to not be greedy, take our profits and run on this trade. So as you see, the market started doing exactly what we wanted it to do, and it hit our target very, very quickly. Now, in this instance, with this price action, it's very easy to expect the market to move all the way down to the previous support zone, and often this is the sort of trade that I would probably risk manage a little bit, knowing that we've got a potential level of support there. But I would probably look to run some a little bit lower, just because the price action was suggesting that that was okay. But because I was aware of the expiry today, I wanted to manage the trade, risk manage the trade, and make sure that I booked the profits and didn't get greedy. So I hope that you find that useful, guys. It's a textbook setup, but there were just other factors and going on in the market today, which meant I just wanted to book my profits and run. I would have risk managed this trade, as I say, around that area. I would have been booking some profits just because I knew there was a level at around 60 as well that the market could potentially react from. But we had a reaction and we held that zone of resistance. It was a key zone, so I was always expecting a reaction from there. I was patient enough to wait for the reversal pattern. I wouldn't have taken a signal if this one. I wouldn't have taken a trade if this signal had broken down, for the reasons that I mentioned, but this one was the perfect setup, the perfect signal, textbook, having taken out those highs, grabbed that liquidity, and then put in that retracement as well. So guys, I hope you found this useful, and I will speak to you again soon. Cheers, guys.